Good morning, everyone. Welcome back to Weekly Stock Market Brief. This is where we do analysis on the overall market as well as the 7 mega cap tech stocks: Meta, Tesla, Amazon, Google, Microsoft, Apple, and Nvidia. We're looking at their levels and take a look at see what the most likely scenario heading into next week would be. And before we look at the technical analysis of the charts, let's take a look at some of the data that's going on overall in the market. So right now we're back to greed. 61 wouldn't really tell me much about the market overall. Unless we start to head into the extreme greed, then I'll be a little bit more cautious. But right now it's just hovering at 61, which is normal when the market has been ripping the last 3 days. And after our election results, of course, we had the huge move in the market overall. And we get this every Wednesday. And so currently the sentiment is probably higher than 41 at the moment, in my opinion. So we'll see about next week. If we start heading into the high 40s, maybe 50s, and then the fear and greed index heads to extreme greed, closer to the high 70s or maybe 80s, then I would probably be a little bit more cautious. But overall, right now, we have a bullish move, and let's see if we can hold that level and make a higher low. So we got our rate cut on Thursday, half a quarter point. And right now, market's only pricing in 1, 2, 3 more cuts overall, and not that much. So we'll see if this actually changes over time and how end up market's pricing. So this is not telling us much at the moment either. So yeah, so market's been strong despite that we have been getting less rate cut priced in. And as earnings, not much going on next week unless you're playing some of these stocks, right? If you're playing any Chinese names, then you'll be looking for Baba on Friday. And for the rest, these won't really move the market that much overall. We already have all the big tech coming up. The only one left is Nvidia on the 20th, so that'll be the following week, so not this week. That one will definitely move the market overall, and so we'll see. And for data as well, not that much either. We had a jam-packed data this week, and now we pretty much this is the only one that would probably move the market, but not as much anymore because it's market already knows inflation is not that strong anymore. So you can see forecast is 2.4, previous is 2.4 as well. So if we get 2.4, right, really not gonna do much to the market or move any other way. Unless we get something like 2.2 or something, right? A surprise downside, then market probably go higher. Or we get something like a 2.7, then that might move the market down a little bit. Overall, nothing too serious. A couple Fed speaks and PPI would come in probably closer with CPI. If CPI comes in line, then PPI is probably going to come in pretty much in line with forecasts as well. So these two move the market. So now jobs would move the market a little bit more, in my opinion. If we come at jobs, if we get bad job numbers, then that means probably more price cuts. That means more potential recession. That's the only thing the market worries about right now. So job numbers will definitely move the market a little bit more. Jay Powell speaks again, I guess, on Thursday. So we'll see about that. And a couple of data here on Friday, but nothing too serious. And let's take a look at the actual charts. So pretty much on this way up, there was 0 red flags. It was pretty much just an hourly EMA rider. Every bounce on the hourly, we didn't even break the hourly EMA. And it just acted support until just Friday morning, where it went to 50-minute oversold, and that was the end of the bottom, and we bounced. So pretty much nothing happened so far in terms of the bear side. This is a double top with the high of the overnight session on NQ. Pretty much the exact same level, double top, but other than that, no signs of red flag yet. We start shaping up an hourly downtrend here. Then I'm looking for closer to maybe hourly oversold to see if it bounces from there. If it doesn't bounce from hourly oversold, then we may look for the 4-hour oversold, which would probably bring us down a little bit lower to these end. So last week pretty much was a bear break out of this longer term rising wedge, and we pretty much never broke that low. So that was kind of like the sign where pretty much we know that there was no follow from the bear. So this was an initial move from the bear break, and that's it. Right? We tried it here again, and couldn't break it. And that was kind of like bull signal for the go. And then after that, we had the catalyst of the election results showing up, and then now that's another 2 leg up after that. And So right now, no signs of red flag as of now, but I would be a little bit cautious. You don't want to just add after 3 days of a straight up shot move. Let's see, yeah, 5 to 6% move in 3 days, right? But you can look for these higher lows overplays and to oversold plays to get the bounce going. For now, I would like to see at least a daily trend change, in my opinion. Right, this was right here. This was kind of like a mini daily downtrend with a chop around, not very clear. And then we broke the pivot of the daily trend, so it's not really a daily uptrend anymore. And now we got this huge bounce going on, right? So let's see if we can change the daily trend. So on the daily pullback, consolidation of the daily, do we get a higher low and then make a higher high, break a new high of that? And that means that we'll probably get a little bit more upside from there. Yeah, so this retracement will tell me a lot about the market of this move, if this is the actual move that's going to continue or not. Yeah, let's see if we get a bull flag off of it. We come back all the way to close to 500 and it'll still be a bull flag. So let's say we come back all the way here, retest of the all-time highs, back test of it, and then it bounces from there, act as support, and then we kind of grind up and it makes a daily uptrend. Then that's the best case I would say the bull's going to ask for. Back test of all-time highs and bounce and break new all-time highs. That's the best case for bulls. And for bears, you would, come down, big enough drop, where you may potentially shape a lower high and come from a daily downtrend from there. And maybe and then we need to crack through this prior all-time high and come back to this structure where we broke out from. If we can do that, come back from this structure where we break out from, then that's a huge red flag. If we start cutting through this structure, right, that would start to shape up almost like a blow off top look if we start to retrace a lot of this initial move from this week. So we'll see. Zero signs of bears at this moment, so I don't want to predict, but I'm just giving you guys two scenarios where on both sides where what you would want to see as a bear and as a bull. So yeah, it's currently still very healthy chart at this moment, and let's see what ends up playing on next week. And let's take a look at the rest of these mega cap techs so we get a better understanding to see if the market is going to continue. So, all right, so Meta here kind of broke below that little level that I talked about, but it kind of wicked below and came back up. So no red flag still. This low pretty much was just this low, right? This low is this low. So as long as you can't really crack through this around this area of support, we're not going to come down to test this. So if we can, this is pretty much the level where bull held. Otherwise, we'll come down and test this level. So very clear. We're talking about this level for the last, month or something, but we still haven't gotten to all-time highs, right? So this is the level where the bears are playing defense. It's kind of like just playing ping pong at the moment, here and here. So we'll see where it ends up resolving, right? Obviously, if this breaks to new highs, it's going to help the Qs and the market breaks new highs. But and it cracks through here, right, and it starts coming back and test here. Obviously, it's going to drag QQs down. So for Meta, I would say it's currently a bull still because we're pretty much just under all-time high. But we'll see where it ends up resolving this ping pong soon. And Tesla, of course, we know why Tesla ripped because of the election results. And yeah, I mean, there's nothing better bulls can ask for. And breaking out of this tightening range, long-term tightening range bull, this is kind of like a fake out, and then was waiting for that result, kind of pull back a little bit, and then boom, got the result, right? Next thing you know, we had what is this tightening range been forming for? Been forming since, let's just say here, down here. So it's been since June, so quite a while, right? 6 months. Tightening range finally broke bull. A huge boom, volume coming with a catalyst. Perfect setup, especially if you have a catalyst behind you. You can even say this tightening range has been forming since back here, right? Since January. And so yeah, so that's a huge move, breaking bull above all these pivots. Now the next move I'm looking for, let's see, 325. So now we're just trading underneath this all-time high structure. You can see this closer to 325 have a lot of resistance. Yeah, 325 would be start of this resistance of this structure. And so let's see if bulls can get above 325, or it just takes a break, right? Maybe it just needs a break. Confirm it's a little bit pullback, see if we form bull flag underneath 325 and retest it, or we just straight shot up through it and see if we can form some kind of consolidation range around side around this highs. So the best case for bulls is that you would want to form a structure around the high of the breakout and then wait for that next move to go. That would be the best case scenario for bulls. For bears, you guys could try to negate it and try to at least retrace 50% of this move and then form a structure near the low of that move and then head lower. That would be the best case for bears. So we'll see. Let's see what kind of a consolidation we get after such a big move. Are we gonna, form some kind of a structure around here? That would be the best case for bulls, and likely that means we'll have a continuation to at least give us strength to test this all-time high structure right here. Yeah. So, all right, let's take a look at Amazon. Amazon stellar earnings last week, and then just been ripping with the market. So new all-time highs. And looks like this rising wedge for me still kind of holds. And says we'll see if it continues to just shop around here. And then if it, same thing with Tesla, what I talked about, if it's going to form a structure along the highs of its range, that'll be the best case. And then continue higher into next level. Or it's going to just come back and then give it all back and retrace. Even if we come back a little bit, it's not no red flags for me, right? Let's say we just pull back all the way back to 200, which is a prior resistance, and prior resistance right there as well. And let's see if it comes back test, and let's see if it acts as support and we bounce off of there. That's perfectly fine. That would be ideal for bulls as well. A back test and bounce. Now we know that 200 is going to act as support. Would be where that means the bulls are still interested in adding around these levels. That'd be the best case as well. For bears, you want to come back, crack through that 200. Means this is a fake breakout, and then potentially come back into the 190s ones. When you guys crack through that and break through there, then that's kind of a below top look, which is less likely to happen. But we just want to be careful if it does happen. The most likely scenario is probably a back test, 200, and then bounce, in my opinion. So let's see. Google. So yeah, so there's no red flags on any of these big tech stocks at this given moment. So no signs of anything really. I mean, obviously anything can shape up really quickly, but nothing at this given moment. So Google is looking kind of like a tiny range to me. So it's like if it doesn't crack through all-time highs, then we might get something like this, where it ends up forming an equilibrium. But so far, we only have 2 touches on each side, so that's not potentially that valid yet. So if Google can crack through this earnings high, then it might start to negate that equilibrium look. So we come back up, break here, and then we might consolidate. Let's say we consolidate a little bit underneath this all-time high structure, and then we break that. That'd be the best case for Google bulls at this moment. But if we stall again under here, we don't crack through the earnings highs, then we start pulling back. Might come back and back test here, 168, and that's not as good of a look. We might get that tiny range, like kind of something like this overall. So yeah, let's see if we can crack this earnings high for Google. Microsoft, let's see. So it's really still trading in its range, right? You can see this thing even ping pongs more than Meta. Just put it, it's kind of just in this range really, right? After this kind of high and then fake out. Not a fake out, but just like, gave bow back. We're kind of in this range again. So really not much edge if you're trading Microsoft at this moment, other than if you short the highs or buy the lows here at the range. It's pretty much a range trade at this moment. But let's see if, we did get that bearish reaction from earnings, but we're kind of back to that area again. Gap did fill, and then bears, really didn't do much, 0.68% on the day. So what I want to see from Microsoft bulls is after this big move. So we come back up here, right, to 431 again. And then it rejects again. I want to see a shallow pullback and then form maybe a flag, and then break above that. That'll be the best case scenario for bulls and the market overall. Microsoft definitely will move the market if that happens. Bears, right? If you guys get a reject right from this earnings gap and then come back lower, which I don't think is going to happen, but if they do that, then we're looking back down to closer to this low, back to this earnings low 406, which is this low as well. And if we can crack through that, we're looking down closer to this 400 psychological level around here. Support. That'd be the best case scenario for bears. And then you crack the 400, market probably drop quite a bit by that time. So currently we have the momentum on the upside, but anything could flip in a second. But at the moment, I don't see anything that could really tank the market like that. Maybe we get just a little bit pullback, but nothing like where we just straight shot down to 6%. And so at the moment, right, just follow the trend on the market. But a little bit pullback, it's not that huge of a big deal. But like I said, not much of a edge on Microsoft other than it's trading this range at the moment. All right, let's look at Apple. Take a look at time. And still no for reflex. It's just, even though we broke bear from this kind of just uptrending line, right? Here, bounced 4 times, and then we broke bear here, right here. So we got that 1.8% drop and another like a 3% drop here after that bear break out of this kind of like ascending triangle. And that was it, right? It wasn't that. That's why we didn't get any follow through from the market overall. The market kind of did the same thing. The market was in a rising wedge and then broke bear, and then that was it. Broke bear for 1 day and then held its lows. Bears never really took it any lower, and so there's not much of a red flag, right? You can just say, even though it broke bear from this trend line, kind of like that ascending triangle, it's still in a new ascending triangle. And right, we're still in this range. There's not really any structural damage in terms of that not breaking as much. We did have a mini daily downtrend confirming here, but as long as it doesn't really break through any structures, then the chart is still okay, right? So for me, where it starts to have structural damage is if we start cracking through this structure, right? See how this structure is acting as support every time I come down to it. So if we start cracking through here and then break below the 214s, that's starting to give me a real red flag, and we crack to the low of this structure 207, right? That'll become some structural damage here. This will start to act as resistance overall because we are now below the structure. So right now we're still pretty much trading just in the middle of the structure, so no red flags for me at this given moment. And so let's see if we come back up to test this 231 for Apple. All right, Nvidia, most important guy, since it has now reports earnings, and they'll probably move the market quite a bit. So the only thing that I see how the market could tank in the near term is Nvidia reporting terrible earnings, and it drops like a rock, and market kind of drags the semiconductor sector down, and we have a big move. Since this guy is a $3 trillion company as well, so if it drops quite a bit, right, obviously it's going to drag the Qs down. So that's the only thing I really see in the near term. Obviously, we still have those recession fears and for a longer term outlook, but nobody can predict that. So the only thing we can see as well is right now is that in the near term catalyst that may drop the market is Nvidia's earnings. But usually they report pretty well, so we'll really see how it ends up playing out. As of now, no signs of red flags. We're at pretty much all-time high, so there is no red flags. What I want to see is, let's say we get a pullback on the market since it's been so hot, right? Just in one or 2 day pullback, come down to test 144s or this 143s, where it's prior all-time high resistance right here, and then we just bounce off of it. Then that's no red flags for me at this moment. And so yeah, Then if we continue to bounce off this trend line, right, bounce, 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 that's why we pull back here to 144, which coincides with the prior all-time high structure.